Hello and welcome to another MCO update on Bitcoin. Yeah, the Bitcoin chart has been consolidating below an important resistance level here, the 88.7 retracement level at around $104,500 for quite some time. To be exact here, since this 8th of May swing high, when this level was tested for the first time. I mean, it's been a week now, and we've just seen sideways consolidation. The bulls at the moment don't seem to be able to drive the price above that $104,500 level. The next level above, if the bulls can drive the price higher, maybe over the weekend, which I would doubt, or maybe next week, then the $109,000 level is the next one, because this is the swing high from January, but also in December this level was nearly reached. So these are key levels that are relevant going forward. At the same time, the inability of the bulls to drive the price higher could indicate that we are sort of nearly about to start this pullback, which is due now, a so-called B-wave correction. A B-wave pullback is due on this chart, and it would take a break below the 12th of May low at $100,700 to indicate this is actually starting. I would see this pullback as an opportunity. The support area, standard support for this B-wave correction, is located at the moment between $80,200 and $92,000. Now, the good news is that the rally from the swing low in April has turned into a 5-wave pattern. That's also what we wanted to see. That's what we've been watching for. And this 5-wave move to the upside indicates that the trend is actually up. It also indicates that the bulls actually plan to drive the price higher. This is all very good news. But it might not happen in a straight line. And to be honest, very often after a 5-wave move to the upside, we get a corrective pullback. That's not bearish. That's simply the breathing in, breathing out of the market. The market cannot only go up in one direction. It needs to recover, basically, or let's say not necessarily recover, but it just needs to calm down a little bit, rest, and build energy for the next rally to the upside, which would then most likely be the C wave, which could reach $130,000 plus. Now let's take a look at the shorter time frame. Here also really just looking at the microstructures. These change very often, but over the last few days, the market has not broken below any of our communicated support levels here. No relevant support got broken. Yeah. The idea was that from this swing low, the 12th of May, another extension to the upside could form, 5 waves up, just basically one more high above the already established May high, which formed around $105,720. This is still technically possible, but the rally from that May low is only from the 12th of May low, that is only a 3-wave move to the upside. Again, because of that, it's not 5 waves, this is only 3 waves. I cannot clearly favor upside continuation. Also, the wave count to the upside is already technically complete. Now, that does not guarantee a correction, but it means it's become more probable that we're coming down. That being said, I'm still watching the yellow scenario, especially as long as the price holds above the Thursday low, because the pullback after that rally, which ended on Tuesday, was also in 3 waves. That keeps the door open for higher prices, maybe in an ending diagonal pattern. You can find tutorials on our channel. But yeah, an ending diagonal pattern consists of 3-wave movements in the subwave structures, and therefore this 3rd wave could, for example, also be an ABC structure, then a wave 4 and the wave 5. This is the way how it could go higher still, but only as long as the Thursday low is holding. Any break below the Thursday low, formed here at around $101,440, would indicate more strongly that the bears are taking the lead now, and we have finally started this larger correction. I know a lot of people are waiting for that larger pullback, but at this point I cannot confirm it yet. I do keep the door open for higher prices. I'm leaning towards the idea, however, that a larger correction has started. I cannot rule out one more high, however. Even in this white B wave, which is part of the larger correction, an internal bounce we might even see a marginally higher high above the already established swing high from Monday. So we have to be flexible on the smaller time frame, but I gave you very clearly the first level that needs to be broken to the downside to confirm further we're actually starting that larger decline. So overall, yeah, just sideways consolidation. I don't expect too much movement on the weekend. I don't expect any surprises here. The pathway for one more high is also clearly outlined, but either way, yeah, we should start that B-wave pullback soon. That being said, I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.